Hey, what's up my friends? It has been a really long time since I appeared on camera, and it feels good to be back, so let's talk about swap-free accounts and swap abuse. Swap-free accounts have become immensely popular in recent times, with almost every broker offering them. But are they really worth getting? Let's discuss. Firstly, if you are new to trading, swaps are an interest that you pay or receive because you are trading on margin. When you borrow US dollars to trade, for example, the S&P 500, you have to pay swaps to your broker because the US dollar carries interest. If you trade Forex instead, like say the pound yen, the swaps that you pay or receive will depend on the interest rate differential between the two currencies. For example, now the pound's interest rate is about 5%, for the Japanese yen it's about 0.25%, so if you go long on a pound yen, you will get 13.7 points of swaps, and if you go short, you have to pay your broker 33 points. For a complete guide on how to calculate the different kinds of swaps, please refer to my explainer video in the description. So if you get a swap-free account, you will not pay or receive any swaps. Swap-free accounts have been around for a long time, and they were actually made for Muslim traders who cannot receive or pay any interest. And back then you actually had to prove that you were a Muslim or that you were living in a Muslim-dominated country. But nowadays, because of the increased competition between brokers, pretty much anyone can apply for and get a swap-free account. So how do traders exploit this to get free money? For Forex, the trader will choose a currency pair with a large interest rate differential, for example the dollar yen or the pound yen here. In this case, the trader will use his normal account to go long on the pound yen, getting this 13.7 points of swaps per day. This translates to about 10 US dollars per lot per day. At the same time, using his swap-free account, he will go short on the pound yen, therefore cancelling out any directional risk. In this way, the trader is trying to get risk-free swaps daily. Gold is another very popular market for swap abuse because of the massive swaps here, but in this case, the trader would use his normal account to go short instead. If both accounts are from the same broker, this is pretty easy to spot. But if they are from different brokers, things get a lot murkier, and the broker that is offering you the swap-free account is probably gonna be pissed. And that brings me to my first point as to why swap-free accounts are no longer worth it. It shouldn't come as a surprise, but your broker tracks every one of your trading actions. All the items you see in your MetaTrader 4 or 5 journal tab are also visible to your broker via their backend software. In addition, they very likely keep a database of every client's trading history, usually in the form of a SQL database that looks something like this. Details of every trade for every client are captured, including things like the market traded, the number of lots traded, the opening and closing times and prices, the profits and losses, as well as the swaps paid or earned. By writing a simple SQL query, which is a way to extract information from the database, your broker can very easily find out how much money you have gained from not paying swaps, or in other words, how much the broker has lost from swaps. If their losses exceed a certain amount, or if it's obvious that you are doing swap abuse, like for example if you short 5 lots of gold right before midnight and close it shortly after, then there's a pretty good chance your broker will simply close your account. So you might be thinking, why is my broker so petty to close my account over a small amount of swaps? Well, with the massive leverages available nowadays, you can easily open a large position with a small capital. And if you throw in things like triple swap Wednesdays, or if you multiply this across hundreds if not thousands of accounts, you will find that your broker's losses will add up really quickly, so they need to find a way to protect themselves. In fact, many brokers clearly state in their documents that they reserve the right to close your account for whatever reason, and they will probably ban you soon as well. So why go through the hassle of having to open new accounts with new brokers, having to withdraw and then deposit your money elsewhere? It's just simply not worth it. Next, your broker will find a way to compensate for their swap losses. Sometimes they openly declare this in their documents by saying they will charge an admin fee, a storage fee, an overnight fee, or a holding fee for swap-free accounts. This is pretty lame of course, but at least they are upfront about it. There are also many sneaky ways that the broker can claw back the money from you. Before proceeding, let's discuss the general flow of prices from your broker's liquidity providers or LPs to their clients like you. Your broker has to pay swaps to their LPs regardless of whether you pay swaps to your broker or not, which is why your broker is always on the lookout for swap abuse. In the middle here, you have a price aggregation software such as PrimeXM or 10, which takes prices from the LPs and splits them into various price streams, which are then supplied to different groups of traders, one of which is probably a swap-free group. Each price stream can receive various sorts of treatment, the most common of which is a spread markup. This is how you get your so-called standard account, which has a spread markup applied but with no commissions, and you have your raw account as well, which has a very low if not zero spread markup, but commissions are charged. So if you're in a swap-free group, your broker can give you a higher spread markup to compensate for their swap losses. There are other kinds of price treatment available, all of which you will not enjoy. For example, your broker can add a delay to your order, or they can assign you to a less favorable LP. The list is endless. So, to summarize, your broker is not a charity. They are running a business to make money, and the money comes from you, largely from the B-book. If a broker allows you to open a swap-free account, even though you are not a Muslim, it's because they are banking on the very likely fact that you will blow your account and that will overcompensate for whatever swap losses the broker has incurred. If you haven't blown your account and your account hasn't been closed, it's because you haven't earned enough from not paying swaps, or because there have been some trading costs that have been quietly applied to your account which you're probably not aware of. So my honest recommendation to everyone is, forget about a swap-free account unless you need one for religious reasons. Focus on trading well instead. For a quick 5-minute guide on the different kinds of broker regulations, check out the video at the top right. I'll see you at the next video.